So I hope you're all doing well out there. It's been another busy day in the stock market. A lot of little small articles that we're going to touch on today, so I hope you enjoy it. And if you're on Patreon, we did drop the exclusive video last night, so go check it out. It was a portfolio review. If you do want to join, link is in the description. But let's start with Tesla. I'm going to do a full earnings review on the Patreon later this week, probably on the weekend. But really quickly, we'll touch on a couple of these earnings because I know a few of you guys want to probably get my initial thoughts for them. But Tesla, they brought their earnings out, and you can see here the stock was down 3.5% in pre-market. If we actually just give it a quick refresh here, it's actually down 7%. There we go. I did not realise that. So yeah, it's having a drop on today on the share price, and when I look at the earnings, I'm not really surprised. I thought the earnings were okay. You can see here the EPS was a beat. The revenue was a beat by 47% year-on-year growth. But the problem is when you look at the margins were still getting compressed, and I think that's the big issue. Everybody was looking at the margins point of view, and it was to see them still getting pressed. And the problem is that, you know, you can have all this really good revenue growth, but if you're not increasing your profitability, it's no good. You know, there's no difference between selling, 100 cars, but if you sell 200 cars and you make the same amount of profit, you're just going into more effort of selling having to sell more products to just generate the same profitability. And that's the big issue that Tesla have, and that's what everybody was staring at. The numbers were okay, but the problem is with Tesla, you're not trading at a cheap valuation anymore. This company before today, I think it was like 85 times earnings, which is a bit of a rich valuation. Especially if you're not growing profitability, and that's the big issue. So decent numbers, and even considering the environment that we're in, the problem is that it's not decent enough numbers to consider your 85 times earnings. That's the big issue that Tesla has, and that's probably why you're seeing it drop a little bit today. The next one was Netflix. So Netflix also brought their earnings out last night, and they dropped 8.7% as well. Netflix was okay earnings once again. I thought Tesla were okay. I'd say 5 out of 10. I'd say Netflix, I'd say probably 5 out of 10, maybe a little bit better. The profitability was a nice beat. The revenue was 2.8% year-over-year growth, which I still don't think is enough for what we would want to see from Netflix and historically what they would want to do. And I think once again, you look at this company here and it's back at a bit of a richer valuation at 46 times earnings. I don't think Netflix can do these numbers and then trade at these sort of levels. Same with Tesla. And I think it's having a bit of a reality check. It's been on such a hot run. It makes sense for it to have a pullback. It would have to bring out fantastic numbers to command the valuation. And those numbers to me don't look fantastic. I mean, they're okay and they're moving back in the right direction, but not what you would command for a 40 times earnings company. So yeah, I think they're just having a bit of a break as well. But the subscription growth was good. When you look into the numbers, the subscription growth was good. It looks like their kind of crackdown on password sharing has seemed to take an effect. But obviously revenue a little bit weaker than what was expected. Alphawave having what was a very good day, and then it had a bit of a chilling out period. Still ended up 1.6% up today, and it's had a bit of a strong time at the moment, as we've seen. The stock in the last 6 months is up 61%, which is really good. So obviously one that I started buying at the start of the year. Alphawave, they brought out their trading update. Trading update was fantastic. I was shocked to see the stock not up more than this today. So they brought out a bit of a trading update. They also brought out a ton of YouTube videos as well, which is probably worth watching. When you actually start watching the YouTube video, you start going, whoa, this is without doubt the most complex and stock that I have the least knowledge in an area that I've invested in, and that's why I've kept it a relatively smaller position. I'd love to understand the industry more and understand the business a lot more than what I do, and potentially I could have made this a better position. But I always say, you want to be invested in what you know. That gives you as a retail investor a massive advantage, a massive catch up to what the like the analysts have and the data that analysts have. What can give you the edge. And I'm kind of breaking that rule with Alphawave, but I'm looking at what I'm seeing, I'm loving, and that's why I still need to be involved in it a little bit. And it would generally put me off ever owning a semiconductor company, and I want to own one. So obviously this is one that I've gone with, and yeah, it looks like it's playing the rewards, because I mean the license and NRE, 150% change, royalties and silicon orders 290% change, new bookings up 196% as well. And you've seen in the last kind of couple of weeks, the news coming out of like winning more partnerships with Samsung, Taiwan Semiconductors as well. By the way, they actually put a little bit of a disappointing earnings in, but I've not actually got a got them featured in this video, but another topic there. But yeah, I mean, oh yeah, fantastic. The bookings seem to keep coming in for Alphawave. Cakebox, this was a little bit of a surprise out there today. It had another good day, up 6% today. It looks like it's getting back to a bit of a fairer valuation. You know, it's 15 times earnings now. You know, not too long ago, we're talking 8-9 times earnings for this company. A bit of still a good dividend yield, 5%, but more of a realistic dividend yield. And I mean, yeah, in the last month it's up 23% after its really good trading update. And yeah, it's, you know, since December times now, it's, you know, obviously had a little bit of a rally. I still think this stock should be a lot higher for how good it is, but it's starting to get back into a better, fairer reflection. But the really big surprise today is that it came out, and this was reported by Sky News. And by the way, Mark Kleinman, if that's how you say it, there was some terrible research done on this business. What I'm going to point out is the offer that was made for the company at £1.60 a share. But when I looked into the what he said on the actual company, it was just like, did you even research this company? He goes on to make a big point about the audit crisis in 2022. It wasn't that big of a deal. They managed to get the accounts restated very quickly. And also, if you look at this here, last month, if you look into the actual financial report, you'll see why the profitability dropped off, and it was still very good amounts of profitability. And also, the growth was fantastic for an environment where we went through the spending crisis in the UK, and yet something like a birthday cakes was still able to pull out major amounts of growth, and the future trading outlook was so impressive. I just come on, is this who they employ at Sky? I can actually understand it now. I say Sky News. I can understand why they're employing something like this at Sky News, but come on, man, do some proper research into the company. But anyway, the point is that it was reported that the Cheesecake Shop, that being the Australian company that actually bidded for Cakebox, which is owned by River Capital, has tabled a £1.60p a share for the AM listed Cakebox. Obviously this kind of got leaked out there. I don't know why it got leaked out there. I don't know who would have kind of decided to leak it to the press. I don't know if it would have been from Cakebox side to kind of go, does anybody want to buy us? We don't really want to have this offer accepted, but we'll leak it out there. We're listening to offers. Or is it a point of view River Capital, leak this out going, look, we put an offer in. If we leak this out, could we get interest of Cakebox shareholders going, oh, we've been through a lot of pain, maybe take this offer out, if it's a little bit of a higher offer. I don't know. But it's a bit strange for it to get leaked out now, because Cakebox actually came out with a statement, which I haven't loaded up here, but they said that they received this offer in June. So, like I said, it's nearly a month ago now. So why suddenly a month after now it's been released? I don't really understand here. But overall, I mean, obviously they got offered a £1.60 a share. If you look at Cakebox today, it currently trades at £1.59, £1.60 a share. So basically, they're expecting to get this company, well, obviously that would have been back in June before probably the really good trading update. So back then it maybe didn't look as ridiculous, I guess. But now, you're looking at it going, it was a bit of a ridiculous offer, because it's basically, what it's trading at today. So I think it makes sense that Cakebox rejects it. I would not expect them to accept this offer. It's way too low for this company. We were talking about this on the Discord, and I said that you have to be offering, in my opinion, you have to be offering, I would say £2.10 a share before we actually start getting serious. But even then, a few people on Discord, were saying that they would be, disappointed even at £2.10. You'd be looking at even maybe £2.50 or maybe a little bit higher than that even before you get it. And I could understand that. That was where if I was in Cakebox shoes, we could have, £2.10 is where we would have a serious conversation, and maybe you pull them out for a bit more than that. But £1.60 is ridiculous. You're basically getting the company what it's valued at today. That's not going to happen. I mean, we've seen it happen. You guys know this company over here, that management team has absolutely screwed its shareholders over by accepting a £5.35 a share. Basically what the stock is trading at. It was actually below what it's trading at, and then the shareholders accepted. So you can see it in these UK stocks. Sometimes companies and the shareholders, unfortunately, or the big owners inside the company will screw over the shareholders for their own personal gain. And that's the worrying thing that you do have sometimes with Cakebox. It's great saying, when you look inside the company, the owner has been buying a ton of shares, really good confidence. He was buying at £1.17, £1.39, £1.22. And also, you know, he owns Shuk Shamel owns 25% of the business. You know, great that he's got such a big insider ownership inside the business. You know, CEO, founder led, big ownership, but also that he has that power. He could actually turn around and, you know, he has, you know, so much voting power that if he wanted to accept it, he could probably start forcing it through. But yeah, I mean, overall, I think that because he's been buying at these levels, he can see that it's, you know, a really, really silly low offer, and obviously it has been rejected, as Cakebox did, you know, confirm. And it is, you know, £1.60 to get a company that is, you know, financially really healthy. You know, there's, you know, the debt to equity is 7%. There's, you know, hardly any debt on there. They sit on a, you know, really healthy cash balance of 7.4 million for a 60 million market cap company. The growth has been absolutely insane. You know, if you look at the past performance and even going forward, they should grow at a good rate. You know, you look at the profitability, great profitability, amounts of growth, even with the reinvestment, Sky News, that they've been putting into the new vans and the new warehouse that they've recently purchased as well. And also, you know, profitability wise, you know, it's a cake company and they're throwing off, you know, really impressive, you know, profit margins of nearly, you know, 15+%. You know, very, very, you know, good profitability levels. You know, this is a really good company, and, you know, you're going to get it for basically flat or nearly only like a 10%, 20% premium. You've got to be paying up for these sort of companies. You know, you've got to be talking 50-60% premiums to be getting this through, in my opinion. So yeah, good that Cakebox rejected it, but it's a good sign as well, as from being a Cakebox shareholder, that, hey, you know, if a company is willing to, you know, start putting offer in, then they can see that, you know, it's a good company, and that's what it is. And I think that, you know, realistically, in my opinion, we'll probably see Cakebox probably push the £2 range within the next 12 months. So yeah, I would say a £1.60 offer for me is way too low. So good that it good that they rejected it, but good that there's interest in there, because, you know, if you're looking to acquire a company, you probably think it's a good company, and clearly River Capital think it's good. So yeah, couple of quick earnings reviews there between Tesla, Netflix and Alphawave, and also a little bit of Cakebox talk about a bid that was rejected from them. So I hope you enjoyed the video anyway, guys. If you could hit the like button, if we can get above 100 likes, that's absolutely amazing. I think we were like 80 on the last video, and normally get above 100, so if you can do that, that's absolutely amazing. But I'll see you all tomorrow.